In this video, I'm going to show you everything about trading with trend lines. You'll learn how to draw them correctly and how to use them to spot great trading opportunities. Let's dive right in and get started. First, let's understand what trend lines are. Trend lines are important lines in a market that show a clear direction. We draw these lines because they help pinpoint locations where the price is likely to offer high-probability trading opportunities. For example, when you follow a trend line strategy, you might notice two specific patterns forming as the price meets a trend line. The first pattern is known as the continuation pattern. This happens when the price hits a trend line and then bounces back in the direction of the existing trend. The second pattern is the breakout pattern, which occurs when the price breaks through the trend line, causing the trend to change direction. Keep in mind, just because the price reaches a trend line doesn't mean the trend will definitely change. You should use other price action techniques to confirm your analysis, which I'll cover later in this video. Now let's move on to a simple method for drawing trend lines effectively. One frequent question from beginners about drawing trend lines is whether to draw them at the ends of the wicks, at the candle's close, or along the body of the candle. The best approach is to draw them where they touch the most points on the chart, giving you the most connections possible. Let me show you an example. In this chart, we see an uptrend because the prices are making higher highs and higher lows. Since it's an uptrend, you should place your trend line below the rising trend. Then, adjust the trend line to ensure it touches as many points as possible. This helps confirm the trend line's significance. Now you'll see that some points overlap the trend line and some don't touch it at all. That's perfectly okay because, remember, a trend line should be viewed as a general area, much like support and resistance. Let's check out another example. Here, we see a current downtrend because prices are making lower highs and lower lows. In a downtrend, you should place your trend line above the trend. Once again, adjust the trend line to touch as many points as possible. It's really that simple. Now that you've mastered drawing trend lines effectively, let's delve deeper into how you can use them to identify high-probability trade setups. First up is the continuation pattern, which happens when the price bounces back in the direction of the trend immediately after touching a trend line. It's important to note that you shouldn't rush into a position just because the price touches a trend line. You should use other price action techniques to confirm your analysis. One effective technique to confirm a continuation pattern is to draw a mini trend line right at the pullback. This helps validate the potential continuation of the trend before considering entering a trade. After drawing the mini trend line, the next step is to wait for the price to confirm the continuation pattern by breaking out of this mini trend line. Once the pattern is confirmed, you can consider taking a buy position. This breakout serves as a signal that the upward momentum is likely to continue, increasing the probability of a successful trade. In this chart, we observe a downtrend, so we place our trend line above it. Upon examining the current price, we notice another potential continuation pattern. The next step is to confirm this continuation pattern by drawing a mini trend line at the pullback. This additional trend line helps validate whether the downtrend is likely to continue before considering any trading decisions. Once the price breaks out of the mini trend line, you can consider taking a sell position. Another useful indicator to confirm a continuation pattern is the stochastics. Here's how the strategy works. In this chart, we identify a current uptrend, so we position our trend line below it. Then, as we observe the current price, we notice a potential continuation pattern forming as the price hits the trend line. At this juncture, take note that the stochastics indicator is at the oversold level. Utilizing the stochastics can assist in confirming the continuation pattern by waiting for it to cross back inside the oversold level. Once this confirmation occurs, you can consider taking a buy position. This crossover within the oversold region suggests a potential reversal in the downtrend, aligning with the continuation pattern identified by the trend line. In this chart, we identify a downtrend, so we position our trend line above it. Upon examining the current price, we notice another potential continuation pattern forming as the price hits the trend line while the stochastics indicator is at the overbought level. We should wait for the stochastics to confirm the continuation pattern by observing for a crossover back inside the overbought level. Once this confirmation occurs, you can consider taking a sell position. This crossover within the overbought region indicates a potential reversal in the uptrend, supporting the continuation pattern identified by the trend line. Now let's discuss the second pattern, known as the breakout pattern. This pattern occurs when the price breaks out of a trend line, causing the trend to change directions. However, it's essential to note that you shouldn't immediately take a position just because the price breaks out of a trend line. This breakout doesn't guarantee a trend change. Additional confirmation is necessary to avoid false breakouts and ensure a higher probability of success in your trades. To confirm a breakout pattern and avoid false signals, one approach is to look for signs of momentum loss before the breakout occurs. For instance, consider this chart where the price is in an uptrend, and we draw our trend line accordingly. Initially, the price was consistently making higher highs. However, upon closer examination of the latest price action, we observe that the price suddenly forms lower highs instead. This change in price behavior suggests a potential loss of upward momentum, indicating a possible impending breakout or trend reversal. Essentially, when buyers couldn't push the price higher, it signaled a loss of momentum. Then, when the price broke the trend line, it confirmed the trend change. This presents a favorable chance to consider a sell position and potentially benefit from the expected downtrend. In this example, we notice a downtrend, so we place our trend line above it. Initially, the price consistently made lower lows, but suddenly, it forms higher lows instead, signaling a possible loss of downward momentum. Then, when the price breaks out of the trend line, it confirms the trend change. This breakout, along with the earlier momentum shift, suggests it's a good time to consider a buy position and potentially profit from the expected up. Another method to confirm a trendline breakout is by identifying double rejections before the breakout occurs. For instance, in this chart, we notice an uptrend where prices are consistently making higher highs. However, upon closer inspection of the latest price action, we observe that the price fails to continue making higher highs and instead forms a double top pattern. This pattern indicates a strong rejection in this area, signaling a potential loss of momentum. Subsequently, when the price breaks out of the trend line, it further confirms the trend change. This presents a favorable opportunity to consider a sell position. In another example, we identify a downtrend and position a trend line above it, as prices are making lower lows. Similarly, we notice a double rejection pattern at the bottom, suggesting a strong support zone within this area. Again, when the price breaks out of the trend line, it confirms the trend change to the upside. This indicates a good opportunity to take a buy position and potentially profit from the expected uptrend. I've just shared several trendline trading strategies with you that you can start using right away. I've also created another video discussing advanced trendline strategies, so make sure to check the link in the pinned comment. You can also explore my other videos on the channel. All I request is for you to spare just 2 seconds to like the video and subscribe to the channel. Your support means a great deal to me. Thank you for watching, and I can't wait to see you in the next video.